Greetings, market rebels. Welcome to this week's macro measure combined with our sector situation video. It is Friday, June 13th, 2025, and I think it's about 3:20 p.m. here on the East Coast. I'm Wayne, and we're going to get into Market Rebellion's trustee disclaimer, and we're going to get into Rebellion's trustee intellectual property rights notice, and we're going to get into a review of last week's slide. My colleagues are keeping an eye on UOA for me, so I'm freed up to get this addressed. And I've got a couple of highlights here. I kind of made everything black and then went ahead and just left a few of the really standout kind of pink color there. So the news cycle, after kind of being not so wonderful, then kind of chilling out, kind of reared its head in a very nasty way, as we all know at this point, with the Israel-Iran situation. And apparently that's ongoing. There were, I think, again, sloppy trading conditions this week that were not really that impressive. Last week we did have a very late save, and they so effectively by the end of the week things continued to work out for bulls. I think that might have been a comment that was worth noting. The other comments that were worth noting are highlighted. I think you just got to remain diligent. Sometimes it gets hard to really be that way, but we got to be that way, right? Especially when you don't have a great feel. You don't have a feeling that things are great, I should say, and that there's sort of some problems lurking out there. I think the way we have, but you had to keep giving it to bulls, and they may still really retain control of the market we need to see. That's really more about this week. This is probably a big note right now because really it is the theme of this week, which is that the patterns that we noticed historically, right, those are really solid. They're patterns that appear quite frequently. They're impressive patterns at times. Overall, they're probably relatively impressive to say the least. And you can get some really good movement out of them. They did portend bullish action. The failures are ugly. And so we talked about a possible failure scenario of those patterns. And this week we're going to talk about that combined with the scene of the crime that we alluded to last week or the week before. Can't remember. Anyway, jumping down here, we did note there was a weak bust out. So we were waiting for bust outs to happen. They didn't really zip through certain levels the way we thought they would. They jumped over certain levels without even addressing them on gaps that we thought could be big. So it's been, right, as is typically the case, the trend changes, you adapt to it, and then things generally play out the way you think in terms of, yeah, we keep going higher. It looks like the market's saying we're ready to keep going higher, but it goes about its business in maybe ways you hadn't anticipated. That happens to me quite frequently after all these years. Just the how we get from, let's say, A to B is rarely how I imagine it still. So maybe I'm just locked into certain ways of thinking. Anyway, that week bust out, we said it was normally not good. Could we need back and fill to encourage? Well, they kept busting it out really this week overall until really this news hit. We had said they were nearing some really high point type levels and critical levels to take out. And that did not work out. The news wild card was still there. We kept reminding people about DDA just being really positioned properly and being ready to make your adjustments quickly because things could shift in this kind of a news-driven environment. Talked about the spidey sense with something lurking out there. Um, this is really what wasn't what I was thinking, this Iran-Israel situation. Uh, but maybe that was part of it. I don't know. I really can't say. But the Spidey sense thing is just still there. So I think it's maybe a little bit stronger too. I'm not going to belabor that. Anyway, we had said absent seriously negative news, the path of least resistance remains hot up, and the all-time highs would be under attack. And so that was sort of on its way to happening because I think we'll see on the charts that we weren't too far away from some really not more than a little bit more than 1% or so in SPY from the all-time high. I'll have to look at the cues again. But yeah, we were getting close, and then this news really clearly derailed things. So even even late yesterday when things looked like they could roll over for a while in the afternoon, they even spiked things towards the close. And we were really, even on Thursday, closer to the highs of the week, significantly closer to the highs of the week than we were the lows. But this news really unwound things. So here's this week's. We're talking about the scene of the crime scenario maybe playing out. So we'll show that on the charts. For those that did not catch that or can't recall what it is, it's just my way of saying that we, way back when we had said, right, where could these things get to? And we had said that a lot of times, you'll notice this over the course of time, that the breakdown point, whatever your level was, you could pick certain ones. Some people that are moving average based are going to say, well, when the action closed below the moving average, this was it for me. For me, it was a combination of different things, but we really returned to those breakdown levels. We got back to them, and that often is the end of the rally, right? So I'm not predicting that. I'm just saying that they often bring it all the way back, and then it starts rolling over all over again. So, and when you combine that with a lot of the patterns we've been talking about, that's where, right, the risk is on the charts and with just behavior. So, again, little review time, going pretty much just real time with everything. The slow, uneasy walk higher was undone by news. That I've been writing that in some of the ideas that we generated this week. Just uneasy kind of trading in my book. The market has not been impressive most of the time, and they were able to really save things. And there was a weak bust out, right? Where you have to give them their due. In the end, they won, but sometimes the action wasn't that impressive on a market wide basis. In some stocks, it certainly was, but on a market wide basis, it was sort of like, yeah, we're moving up, but yeah, it's not really super robust, even though things kept working out for them. So that does seem to have been temporarily, at the least, undone. The resistance got real, and that's what we talked about. We got up near those high points. You were going to hit, probably hit real resistance. You returned to the scene of the crime, as I said, and so you've got that going on. So I'm calling it a dubious grind. We had a late Thursday jam. As I said, they really had things looking okay. We were seemingly on the way to new highs, not necessarily today, but if they did finish the week strong, it probably would have put us real close to attacking those highs. But the late week save is a no-show this time. So that doesn't seem like it's in the cards. Now there is a little bit more than a half an hour remaining, and you never know. I doubt it though, just given the way the news cycle is currently unfolding. Again, that's the news cycle being pesky. I think that's part of what created these sloppy conditions. Bulls have been able to shake virtually everything off. They do seem to have finally taken a shot here, with the market backing up 2% from the highs that were set earlier this week in the SPY. There was, which I can't cover during the week, but some negative divergence did appear on the charts during which I'll cover, and then hopefully folks that are new will be able to spot that. Just another little thing that registered that sort of told you that, hey, maybe be really careful here. The XAU also remains stout in the back half of the week, and that can often be a little thing to keep an eye on. The VIX stopped going down. That would be another thing, right? That you're like, okay, these are little things that could portend something. Maybe they do this time, maybe they don't, but it's always good to have your eye on that just in case, right? You're kind of feeling like, wow, I've had a great run. I probably should trim and roll now, or at the very least, that kind of thing. So economic data is not worsening to this point. The credit market negative ratings are up, just as we mentioned last week, so I'm reiterating that. And so TNX was up on that. It was still moving higher. But then with probably right a little bit of a flight to safety type thing, it kind of cooled off, and so that's kind of a nothing really this at this point this week. I don't see anything big happening there. Just a reiteration of what we've been saying now for a few months practically. This is where I highlighted it though. We talked about these air pockets that we left on the way up. Could it matter? We mentioned this for probably about a month, maybe at this point, is my ballpark. Has the rally ran its course? Still not sure, right? So I still don't know, but you have to put that out there that the way that we went up, really makes it vulnerable should we really roll over because with all the gaps and gap fill potential. And remember, for me, I'm not really a gap player. Once a gap has existed for 5 sessions after the gap, I start to ignore it as a short-term factor personally, until we start sort of round tripping towards it. In other words, the trend changes back towards the gap in a meaningful way. I don't even think about it much, and just then I start factoring it in though, because I that's how a lot of these gaps that people don't think will fill do fill. There's a sudden shift. There's a rug pull that's pretty substantial in the market. It creates selling creates selling, and the panic kicks in, and then you get things really careening lower quickly. Gaps get filled, and they clean everything up on the chart, so to speak. That's something you have to be prepared for if we have a real sell-off here, which remains to be seen. So that possible failure scenario, after returning to the scene of the crime, having these inverted head and shoulders that we talked about for a while, plus the cup and handles, these things that could fire that really did not fire. And I noted this before that failures can be swift and painful. So that's what we have to look out for because the market now is in flux, right? Where you could say that the intermediate trend could actually start to waffle a little bit. The short-term trend certainly has waffled here as a result of this, and so some technical damage could show up. So if you note right that the VIX started doing its thing, the XAU remained stout. There were some these patterns did not fire. There was a lot. There's market breadth, which we'll get to, has taken a hit. The risk on areas we talked about, they started looking like they were ready to work, then they couldn't fire, right? So that got short circuited. Some of the stocks I think we talked about managed to pop a little bit, and that was it, right? So when you don't get that sustained pop, you immediately have to again put that in the column of I'm a little concerned now, right? And just be a little bit safer with things. This looked rough, like a rough week in the end if things hold where they are, right? It's going to go out with a rough look in terms of breadth and sector behavior. I think new developments really are the market's compass, what's going to guide this market. So for me, right, I hate to say that because it kind of creates that jump ball scenario. You tell me what the news will be, I'll tell you what the market's likely to do. But I don't know how you could get away from that. It's very hard if you're doing nuts and bolts charting the way we do, and you're not trying to do something different, right? Where you're looking at this really big picture pattern, you're saying this is part of this cycle, and where we're in this wave, and this is how this is going to unfold, right? You can bring that to bear if you want. We try to do nuts and bolts stuff in these videos and try to convey nuts and bolts things in the services and in webinars because most people are not into that. A lot of that stuff is unwieldy. A lot of it you really can't easily sort of unfold or unpack under when you're under time pressure in the markets. It's hard to reference a lot of that across a lot of different stocks. So we kind of keep it straightforward, I guess it would be one way to put it. These intermediate and long-term uh, charts, I think they're still in their uptrends. I mean, long-term is for sure. Intermediate trend is hanging on. But short term is a bearish turn, and that is concerning. And I do think that the intermediate could be at risk if we have a couple more days of poor action. So if that happens, that probably means you have a couple weeks of poor action. If you get a few more days of poor action, you probably get a few bad weeks reading the charts. Now, what the news does, I can't say, right? If suddenly there's this change of tone that's really the opposite of what we're seeing right now with attacks on well, from one country to another. That's not normally a good thing. But overall, I wouldn't want to fail to mention that this is a typical hey something's broken out reaction with energy zooming and that kind of thing and stocks immediately selling off. But a lot of times these things are just short-term sell-offs, which is part of the reason why we can't say, right, will these air pockets matter, and are we really in complete mark? We are in market in flux, but are we in market in failure? It's hard to say. It really is because you're still holding support in most places, and just patterns failed to fire the first time they got to resistance after a long run, even though the action wasn't perfect leading up to it. Uh, Far from it. You can't just say, well, that's it, it's over. I don't think you can do that just yet, but maybe some people have, and maybe they'll be right. Anyway, we did mention that last week. We can't, what I was getting to is, right, this, what we noted the last few weeks was not good, but you can't fully rule out that we back and fill. I just think you had such a long run and things ran out of steam, and now this news is timed in a way that helps to justify some selling in the news and have the market back up, which it has, right? I think the Qs are probably off about 2%. At the lows today, they're probably off 2% from the highs that were made on Wednesday. So that's that. This is a repeat. The news wild card's there. That's why you got to be DDA. The Spidey sense is up a little bit, which is why I put an asterisk there. I did concede last time when I was pounding the Spidey sense table. It really turned out to be a nothing burger. But that's not normally the case where usually when I have a Spidey sense type thing, it's not a goose egg the way it was last time. So, but it was. Unfortunately, or fortunately, depending on how you want to look at it. So I wasted time, but we didn't have anything terrible happen. I guess I'll take that every time. Anyway, I'm just sticking with this. The current thoughts are news developments likely to continue to dictate, and I think we just have to keep analyzing the price action and technicals, which we'll do now because we're going to do a quick stopping of the share. I'm going to reposition things. But if we do this and we do it during the week, then that should help us out because, right, it's knowing what the news will be next is not easy. So it's very hard to forecast news, right? If you're not really gifted in some ways or dialed in. But what I think I'd like to do really quickly, and I'll start out with the SPY, and I'll try to show this on this chart. You know what? I may do this actually. Let me see if I can get this one, this clean chart. And I'm not really going to draw this so much because I don't want to spend the time making sure these lines are all in the right place. But here's kind of that inverted head and shoulders that we talked about with, right, the start of kind of like a shoulder sort of in here. Then you get the head, and then you kind of get this little shoulder developing, and then you start working your way back up. And this is really what I was getting at, where if you want to say, like right off the high, where did you quickly break down from in a big way? You can do that in multiple ways, but this really here to me is the breakdown bar. That's the long breakdown bar that you just never recovered from. But the break really happened up here in terms of a support line. And I think a lot of you know that I think this is a very underrated technical analysis technique or tool that you can use. And so that to me is the break of support right there. The first sign where you could reasonably and say, yeah, this thing's now broken. Now, that's really clear that the trend broke there and just kept going. Um, that is right near, right? If we look right beneath that line, it's right near this week's high. So I'm not tooting my own horn. I just mentioned that whatever a month or so ago. I can't even remember. I don't do this for that. I don't do this for my ego. I don't have an ego about this stuff. I've been so wrong about so many things that had. Well, put it this way. Put it another way. I had to learn so many things from the market that yeah, the market's a great place to go if you want to learn how to be humble. So it's a great place to go for that. But anyway, that's to me is really where the breakdown began. You can draw it slightly differently if you prefer that line. That was pretty much it. And you made it back to there's my point. And we talked about that. So there's this weird sort of behavioral thing where once it gets back there, you get rollovers. And I noted in this case, it's there, we talked about a cup and handle last week. I forget which stocks have what. My head's always spinning with all the symbols I look at and other things. But anyway, this here, right, this is somewhat concerning because you stopped really where the resistance got serious, which was right near the prior highs. And I'm going to put a line here, and this could be, I think that's a fair line where you're breaking down there. So will this end up being something reminiscent of this? I hope it isn't, but now that we established, right, the kind of look of these inverted head and shoulders, and it's not just in obviously SPY, it's in a lot of stocks. It's also in other things, other ETFs like the Qs. And those were also 1% or less from the all-time high on Wednesday, right? And I think the breakdown there is the same type of thing. You can draw it however you want. If you have other indicators that you like to use or techniques, there's nothing wrong with that. I think that's a fair breakdown right there, right? So you definitely got back to that. You even got above it, and you might not really still at this point, you may not fully break down, right? We just don't know yet. This could be like a little dip below. You might come back to where there's sort of a flat line. I would say there's a flat line pretty darn close to about 523. You might pull back to 523, 524, hold, and then find a way to rally on some kind of a peace deal, that kind of thing. We just don't know. But this is real risk because, as I said, right, long run, uneasy trading, breath is rolled over, you've returned to the scene of the crime, you've got air pockets you left on the way up through the utterly mad gaps they put together, and you drew a bunch of people in who are real true believers, and so now you could get a quick rug pull, and you can't really say, well, that it's not due. That's crazy. It probably is due. I would say a reasonable person would say, yeah, like a little bit more of a pullback than what we've had really is not a crazy thing. And I don't necessarily mean we crash right back down. I just mean that you get something that looks a little bit visually more impressive of a pullback. Something maybe on the order of this right here, right? Where you get something like, okay, that's a real pullback. Anybody can see that, right? That's a decent pullback. So that's what I'm getting at. But what we can add to what we saw this week is this, which is if I make this an easier focal point, pop this out a little bit, you'll see, right, that some of our indicator readings over here on this high right here, which this high exceeded, right, this kind of rounding top high, same thing, kind of like a rounding kind of cluster high or top high. You could see you had better momentum readings here. And here, your momentum readings on RSI and the other indicators are not nearly as good as they were, despite having registered a higher price. And that's what a lot of folks are going to refer to as negative divergence, because the indicators are telling you the strength isn't as good as it was before, despite having higher price registering. So that was there to be seen as well. Trying to like give you, if you're new, trying to give you maybe like little things that may be able to help you next time, which is the whole point of this video, trying to help out and maybe things mainly for the upcoming week, but I try to share other things that I learned that I think helped me. And here's XAU kind of hanging tough, right? Being pretty stout. So this area really did kind of hold on. That we've talked about that for a long time. This has a pattern that did fire. And so that's been something really that's hanging on, that's telling you that. The VIX also kind of doing its thing 3 days ago, right? Kind of like falling down, seemingly on its way to 18 something, or even lower, right? I was talking about getting down to 18. I'm not getting good separation here. Yeah, we were talking about there, and then where we get to next, and we were talking about, I think, well, I can't even get the levels to show up because Thinkorswim did the old percentage change on me that it does. But I think we were talking about it getting down into the mid-teens, maybe, right, as the next level. They didn't really even let that happen, though, right? It kind of fell a little bit there below 18, got to 16 and change, and they've got it worked right back up here into the low 20s, right through the 18, and it's rounding up because this news really shifted everything clearly, right? So, but these were a couple of little signs there that things were not really spectacular, maybe, right? Another thing would be the XLE. This thing really had a week. We were very fortunate to get some UOA early in the week in the sector. Now we did have some late as well. I think it needs a little short-term breather. I'm hoping those ideas do not trigger right away, that there's a little pullback, and then maybe in a few days, if it is going to go, that they trigger after a pullback, because that'll probably make the trade easier. But I know we had Exxon UOA. I'm pretty sure that was on Monday, and you could see that, well, I'll go over to Exxon, but you could see the sector had a really nice move this week, and that's obviously due to this geopolitical awfulness that's developed. But there's Monday that I'm mousing over, and so I'm hoping folks did well in this one this week because the paper was dead on target. The charts told me that there was a possibility with maybe sort of a double bottom-esque, slightly improving technicals in some ways, not obvious ones, but in some ways I thought. And then you got to, with that kind of news maybe out there, you've got to have that in your log when you see that. And they just jammed it up, about $6, I think, through our trigger without really looking back. So, but that's when you start seeing energy behave that way, when there's geopolitical stuff and people are positioning that way, and you see the sector lift, that's another hint, right, in that context that, hey, this is concerning. Ryan, I'm pretty sure Greg too, all week long they kept reiterating, be careful with this Israel-Iran situation because this could turn into a problem for the market. Um, let's see, there was one other thing I wanted to cover. Oh yeah, so we talked about coming in with Google this week. We had a little thing that we talked about there, and I think in Amazon. And this started out nice. This was actually on its way quite nicely from last week. And you could see how a nice breakout above, right? Really, this is why you always have to be on guard. You've got to be on guard for the false breakout potential and reversal. And that's exactly what's happened there. And I know a lot of people probably get tired of me reminding about that almost all the time, but it's something that if you're new, and I just all we same thing happened in Amazon. We had a nice little mood developing there. That also reversed, right? Because the market just didn't get that, it just didn't get that push. It didn't get that oomph behind it. SMH kept finding a way to grind, 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 had some names in there. Some of them did, I think, okay to well, but there's another one, right, that was breaking out and now it's pulling back. And we just don't know if this breakout is going to result in the breakout, I'm sorry, is going to result in a pullback that's going to just then support it above, let's say, that flat line near 250. We're going to hold there and then start going up, or we're going to break down. So you got to keep your eye on this. It's obviously right. Things are in motion. News is driving this again, and that news is probably going to be the short-term driver. Now there could be other news that impacts as well, but that's what you've got to do. Um, that way, I think we also had Riot, and this is a failure of crypto to break out. So when we thought we saw like, risk on looked like it was set up, it started working out well early in the week. In fact, as the market was making a new high on Wednesday for the recovery since the lows, this thing had moved up nicely at that point. But and other names in the space did too, and there was paper on them and all kinds of stuff, but it just wasn't able to maintain. And it looks like this geopolitical really, I guess Wall Street allowed that to put a damper, which is understandable, right, given what could flow from this. So certainly not in anything I know enough about to do much more talking than that. But yeah, so a lot of things that we liked got off to a nice start. That was good. But again, there's your risk management coming back again. So let's get back to SPY, and we talked about it. And so now we have the breakdown possibly happening after all the other things that I've reiterated at this point twice. So now I think your big level becomes the 20 day in light blue, and that's at 593.32. You start cracking below there, right? You can't make the argument that, yeah, we're holding above former support that we should hold above because this high will be gone. Other things near there where the prices respected that level, that's all going to be gone. That 595-ish, 594, that'll be gone. You're at 593.33 on the 20 day right now, SPY. So that opens up space down to this group of SMAs, the 150, 200, 100 respectively. And that could be a backup area. Remember, we talked about 585 before being important. So there is a flat line there too, right near 585-ish. But there's also one near 575, and that happens to be just about where the 100 day is. So there's some room there. If it doesn't hold there, you've got the gap closure to look for at 567.50, which probably the 50 will be near or fairly close to at that point because it's 565.30 as of right now. So it just so happens that the midpoint, 585, 75, 65, those are the numbers to play. And this has happened to us on the way down before and also on the way back up again. But as I noted, they just kind of hopped, skipped, and jumped right over some really key levels on their way up without even having to fight their way through them. This should have been more of a fight under normal circumstances, but it wasn't. They just kind of got through there, held, and just up, and away. But I think they all know that it's been going on ever since QE started. That they've got to really, instead of fighting through it all day long with real buying, it's a lot easier to get the futures above or below certain areas with the futures leverage than it is to sit there and have to play the equity purchasing during the day or selling during the day. Anyway, so that's that. Now, probably what's worth doing, and I wouldn't say this market's toast, right? If you had to just take this snapshot in time, right, it's not this biggest deal. You're holding above a rising 20. Almost all your SMAs are rising. Maybe they all are. I can't say for sure, but they look like they all are. Usually that's a good sign. Just because you had a false breakout where you didn't keep going, to attack the highs this week doesn't mean it's over. So let's just be super clear about all that. But you could see where quickly this could evolve into or devolve into bigger trouble, where you give a few more percent back. And then if you hold here and you don't go for a little bit, you could be right back at the highs or at least attacking this high on your way to maybe attacking the highs because if you hold near here, even at today's low, you're only about 3% away. So as long as you hold up here near the 20 and you don't crack it, you're not doing too bad. But it might be at this point good for us to drop. And let's do this on the other chart where it's a little cleaner and I'll probably have to remember to get rid of it next week, but we will just get some retracements on here because at this point I think it's worth seeing if we did start to go into retrace. Oops, I grabbed the wrong tool. My bad. Sorry about that. Let's get the retracement right here. Yeah, this is where I need to have that cappuccino late on a Friday, and I don't have my cappuccino machine running right now. Let's see, 60506. Get that nailed to the penny. Remember, I wouldn't trade these things to the penny. I always cheat in front of them by wherever I think it makes sense because 481.80. The reason for that is that if everyone's at the same level, you want to be a little bit in front of them to get your fill. Anyway, um, the first pullback happens to be about 575, so right near 576. That's your 23.6. So there you go. That's a number we already talked about. I think when you look across flat line wise, you can see that the market respected that level once it got to it, once it got through it, once it got above it and backed up. So that's been a level that's been respected. It's a level to keep in mind. So yeah, I think right if you wanted to say where do the fibs matter, it's there, right? That's the first one. Now, boy, right, if we start dropping, that's for about 4% away, so not quite, but you get the idea. That would be a really kind of a rough week, right, where we really would lose more than 4%. It happens, but it would be a rough one. You do that, and then you start getting back to the gap closure, right? I think you have to look for that next, where we talked about a little few minutes ago, 567.50. Right now, if it does hold, obviously this high is your new thing to 60506 is where you have to look for attack. Where up here could there be like a flat line shy of the action? I'm not going to try to get it down to the penny, but you might be able to say that 608 is your another level up there, rounding it off, and of course the 613-ish is the all-time high, right? And we can do the same thing for the Qs, and we'll do those for IWM. We'll do them for the diamonds. I know that a lot of people do like to have levels to potentially work with, so let's do that so people have levels to work with if they decide to take index positions. Well, I should say index ETF positions, but technically. So this is, I think I'm going to go a little bit higher. There you go. Maybe that'll get us closer. And just will give you some ideas at least. So the high on the highest high that day was 536.78. We are not that far off. fortunately. And then the low here was 402.39, and we are off. All right, and now we will have our fibs for the Qs, and the first one puts us at about 505. So that's worth noting. Um, the- Oops, the next one down is 485, which wow, that would be quite a tumble, and that would really kind of be dovetailing with that gap. Right on the upside, we're just going to use that high. This is where you have to attack first, 536.78. That's 2% away, and then you're only less than 1% then from the all-time high. If you wanted to say, well, what about something just below there? Probably that close at 539.50, right? That's I think your highest close. Yeah, 539.50 is your highest close. So if you want to split hairs and 540.81 isn't good enough for you, and you're thinking it fails to go through, and it does move up, but fails to go through 539.52. Just I would pick that closing high right there. But you can see, right, this is definitely at risk. We're going to take another look at we'll take a look at market breadth here because you can see, right, just the general look that we have with it, you can see that it really has rolled over pretty significantly this week. So the bottom hasn't fallen out, but you can see that we did roll over in virtually every way, right? It's everything sort of came, which you'd expect, right? With this kind of a day developing, you kind of came to this, you were doing really well, and you just kind of started giving a lot back quickly. So, a natural reaction, probably, right? I would say this is probably what happens most of the time when news like this unfortunately develops. So that's what you have there. I don't think on the quick look at it you can deny that visually that a lot of these measures are just rolling over at this point. We'll go back to the other chart to dovetail this with the SMAs. So yeah, I mean I think your 20 is very clear. You lose the blue 20, that's where it opens up. And I even put a spiders bearish idea in the spiders today. We finally had some bearish paper. We've been running really so strongly call in UOA where you just can't latch on to that many. But we did finally got a series of players in different put side positions, and I got a lot of names in. Not as many as I would have liked, but it is what it is. You can only take what's there. But so you maybe, let's see, low that day, 511.93, 511.84. Technically, there's an unfilled gap if you want to call one that right near 512. If you want to hang your hat on that, I would say in spirit it's basically closed, but okay, it's open. The 150 and the 505 level, interestingly, are going to end up dovetailing. So I think that's it after that. I think you look for that. Now, if we get beyond that, I guess come back and I would use the SMAs and use the SMAs and the other fib levels at that point. I don't have the flat lines on here. I have them on other software. I'm trying to keep them separate so that nothing gets super busy. I know some of these things are busy, but there's not much you can do about it. But yeah, anyway, that's where you would be on those levels. And like I said, the upside levels we already talked about. Another risk off factor was IWM. So we again started getting excited about what IWM could do. If IWM could push its way through, we thought it was going to probably try to go and work its way up to these SMAs and see what happened, and it could not get through. It just could not get through again, right? So that's been the thing. IWM's had its moments where it put nice runs together, but it's never been able to join the party that the spiders and the Qs have been able to hold. And so we keep looking for that as a sign that wouldn't that be great, right? If the lower dollar, smaller cap names finally joined the fray, and that means that Main Street is doing better. It's not just the fat cats doing better. And it just, again, disappointment. So there's some of your lines. I think what stands out to me on this one is that the 100 is the dash white. And once you get below there, you could get saved a little bit by that long term formerly resistance line, now should act as support line. But if that doesn't hold, I mean, you're probably on your way to the 50 realistically, right? And that's going to put you all the way back down near 200. It's at 199 right now, near there, 199.03. So a lot of good work could be undone quickly if this former resistance now expected to be support line near about 204. If that doesn't hold near 204, should we fall further, that's going to be a problem. You're going to give it all that back to that point, and maybe more. We just don't know. But that's what I would use. Clearly, right on the way back up, should things suddenly resolve and start getting better, or the market starts shaking it off, it doesn't care. You got to just keep focusing on the 150 SMA and Rust and the 200 in purple. And if they get through those, then your next level is going to be this high. But I think that's certainly one you can come to me or Ryan in a forum or in the webinars, and say, hey, what do you got next? I mean, I talk about these every week because I know that a lot of people like to have levels to trade these too, and just what's the market itself doing? It's all part of that mix. So, but I just don't want to put too much out. Now, on the downside, like I said, I think the 50 is the next big thing if this doesn't hold. Not that there isn't a flat line or maybe some other support somewhere in there, but realistically, I think if you're failing that bad, you're probably on your way to the 50. So now we'll just head over to the diamonds, the opposite, the big caps. A great example of, right? You get there, you fail, you pull back, you work your way back up, you get through the second time. Looks like you're able to hold. Look how Thursday really was another test. So you tested things most right near that 150, which is sort of a flat line above that 420, say 8 level, and you kind of held and touched most days this week, and we're looking really strong closing Thursday, and look at this reversal. Just a very this is all news, and that's why Ryan kept reiterating if something starts happening, it's a problem. So clearly, you break down below today's low. Of course, there's going to be a flat line in there somewhere. I'd put that near 419-ish to kind of pull a round number. Excuse me on that. But another one where I think you have to just look at the 50, right? If you crack here, there's no rule that says hey, you can't stop. Obviously, it just did right there on the way to the 50. But with this kind of news driving it, uh, I would expect it to be kind of ugly, right? Where you probably work your way down there if we keep having war escalation, right? Or just attack after attack going back and forth. Now, even that kind of back and forth attack stuff, if it doesn't turn into something super newsworthy and rare, the market will become numb to that as well eventually. But um, unfortunately, it will. But or maybe fortunately, depending on your viewpoint. But initially, they usually take these things seriously, and then once things sort of improve between these two countries or whatnot, but even before then, they'll start moving things back up. But that's your level, right? The big level on the downside, if you can't hold Friday's low, always have to remember a slightly lower low and reversal is a big deal. That can happen on any candle pattern, just simple price action. It can happen on, if you're not looking at it as a candle pattern, it can happen, with patterns. We talked about these false things. So you got to be on guard for all that. But probably this high close of 430.49 is your big number on the way up. That's about 2%. You all know that it needs to click through and hold above that high to really say, yeah, we've exceeded and held above highs. But right, if you don't go anywhere with it, like you did this week, you got above there on Friday, spent almost all week dawdling, and allowed this news to really rip things down because you were not able to advance the ball further. So now you're at bigger risk because you didn't ascend more. But that's that on the charts. That is the main major index ETFs. I'm trying to think of what else we can look at, but yeah, I think the VIX kind of swiftly turning around, right? It's sort of telling you that the market is taking it seriously to a degree. We saw risk off in the crypto. It did have a decent start to the week. Everything looked primed. There was paper. It looked like it was ready to go, and then this news really unwound things. Right now, it's interesting that gold and silver have held up apparently through XAU, or at least the stocks have. Meanwhile, right, Bitcoin is having a rough back half of the week. You can see the last three candles. So that's that right there. I still think there's hope here. You're still holding above there. This high would be higher than this low. I'm sorry, this low would be higher than this low. So it's not the end of the world yet. This could end up resolving, kind of creating like a triangle type uh, trace out here that could then still launch things. But yeah, it's definitely a setback. Another one that failed was on the way, seemingly on the way to challenge the highs. And then with this news kind of bubbling up more and more, it also reversed off. Probably not acting like the hedge that a lot of people would like for it to act like. So, but again, I'm not going to get into that too deeply. Let me try to bring up the sectors so we can take a little bit of a look at those. And they are over here. Let me pull those over. And I think it'll just be safe to say, like, if you look at this, we'll do a quick check. One, two, three, all down on the day. One, two, three, all down on the day. One, two, three, all down on the day. Leadership sectors, XLC, XLK, both down on the day, up on the day, right? Energy. And we all know why. It obviously is directly related to this news. Like I said, fortunately, there was paper in there, so we were able to get in with some ideas earlier in the week, some later in the week, but that market I think did have a nice pop in XLE. Problem is, I think in the short run, it got a little bit overdone, and ideally with some of the newer ideas, you're better off having this cool off a little bit and then maybe re-energizing as a trade, although that might be bad news for the world, right? And for people if that trade has another leg to it. So I hope it doesn't, if it's mainly lifting because of that reason. But here's your, right, you were doing really well in XLK, and this all got undone. XLC got undone earlier in the week. That's, remember, Google's part of that. So it's different things that had them concerned. Leadership kind of fizzled out there. So not a good week for XLC with a new high and finishing really down here. And you're not far above, I would say, a support shelf on near today's low, right? So that's not really a good sign. The financials, another one that we're seemingly on the way to challenge highs. They are closer to, right, the recent sort of swing low. Not a good sign. They've got a lower high in place, so you're looking at a possible trend change there. XLRE really hung out nicely, held up, sort of hedgy a little bit maybe there. But again, not really busting out and going through if you want to look at the half empty take on it. This one, XLV, a defensive one, not surprisingly, right? Not a great day since it closed lower, but on the week it was better than most. In terms of the staples, they even, after hanging out all week, even they got hit this week at the end on this news. Same thing here, right? These were doing okay in discretionary. That also topped out when XLC did on Wednesday. A very important sector at times. Total reversal right back down from whence it came. So this thing closed better last Friday, and now you're back below that. So another false breakout. This is a good one to show that this is exactly why, and I can't make it larger. This is exactly why you got to be very diligent when you get those breakouts above key levels, right? You could see that there was a nice little push, a push for a second day in a row. Looked like they had it on the way, and then unwound, hard. And that's why your pal Wayne always mentions taking the quick trim and the roll when this news environment is as is. That advice to at least consider doing that, I think, is even more valuable because you get this scenario as we've seen many times the last several months, not just two, but the last, say, 4 to 5 months, we've had news hit, and hit. And at times it's been good, and at times it's been bad. And usually it sort of gets streaky. And so when you have a bit long run and it's sort of aging, it's possible, especially with this news that hit here. This was not really a black swan. It was more of a gray swan type of thing where I guess, or whatever you want to call it, that it was known it could happen, and it did, unfortunately. But basic materials, again, another one that was doing well. so were industrials, and that got unwound. And the work they did this week was completely unwound by the end of the week. It wasn't like they were on fire or stellar, but they had their chance to break out and they passed on it and they reversed down ugly from that point on. Both of them pretty much very similar. So, defensive name theoretically, XLU again. Jury's still out on exactly what to think about that one, but um, that in terms of what that represents these days, but hung in there. So I guess give it its due. Maybe that is a little bit of defensive positioning, but it's also been risk on at times. But yeah, I think you can see between the sectors and between that and the market breadth that it's a quick look. We're not going super in depth on anything these days like we once did, but that'll hopefully resolve at some point. But anyway, it's just not a great look. It really is not a great look. So this would be maybe something to look at over the weekend. If Bitcoin's able to hold it together, that could be a good sign. Probably though, right, it has to do with whatever headlines develop. And there could even be something developing since I started to get into this stuff. But overall, a lot of charts were undone. I was able to fortunately add an Apple idea on the downside. There was some paper. There was a triangle that developed in Apple. Couldn't tell the way that they positioned themselves if it was a hedge, and that Apple had all the room it has to sort of technically catch up because it's fallen so far from the former highs. Maybe this represents technical value to some players. But yeah, I think this news has sent it, set clearly, right, sent it out of the triangle to the downside, and it made a new low today. So that one is going to obviously help undo um, the weightings. Obviously, are not helping if that's really in sort of further pullback or triangle breakdown mode. Nvidia, I almost talked myself into. I just couldn't talk myself into this on Thursday. I wanted to talk myself into it really bad. It just hadn't really broken out. It looked like it was on the cusp of breaking out. And I don't have time to wait and time everything to perfection because of my responsibilities. So I was really like, wow, this really looks like now with this close and kind of we're now dealing with a week of nothingness. This thing really having this really kind of reversal candle, almost like a bullish engulfing, um, closing at the high of the week, closing strong, closing at a recovery high since the lows. If it weren't for the news and the kind of uneasy action in the market, I probably would have forced myself to do something late on Thursday because I do think it still has that potential. But unfortunately, or should say, fortunately, I didn't do that. But there's one right that I thought could really be on the cusp of tacking things on. Microsoft, I liked for a while. That was doing well again. Remember we talked about it, I think way back here. I want to say it was in near 460s, my recollection. I've been sort of pounding the table uncharacteristically on Microsoft. We've had ideas in Microsoft. I traded Microsoft, um, but I was been out of it for over a week now. But anyway, um, yeah, so this one just right doing great, and then you get undone by the news, right? So I'm just trying to show that even even uh, something that's been acting so well really was undone. So Google was undone, it was undone. Amazon, which was acting well, and we liked that coming into the week, that was undone. So that's why you got to be diligent about it. Nvidia was undone. Let's see about Netflix, even Netflix, right, which was kind of like world beater until this week. Tesla, this was acting well. That got caught up with the SMA resistance. It couldn't fight its way through. Might not be over there, but I'm just saying, like, that's the thing. It doesn't always work out that stocks that are really strong sort of respect what's happening and react to it, but they do. Usually they do. Like this was another one that we had in the services that we put this in and had a nice little pop there into Wednesday's high. I think we were putting it out Monday somewhere. Decent little pop, but that and Palantir, they were doing well until midweek. Nice little pop there and up to 140. Overall, not a bad week in Palantir. That was our name on Monday, late Monday. closed at 132.06. So I think folks probably did okay in there for some of the momentum services, which have been having doing well lately. I think, really maybe better than usual with some of the good movement we've had in some of the bigger names that we've had in there, but at times. But yeah, but like just that was a solid week. But I mean, there are times where we get runaway train things that really, really roll. And I think this was on the cusp of doing that. Challenge, not Palantir, but the market and stocks obviously within it, challenging the all-time highs potentially this week or maybe next week. But now there's no way around to say that this did not put a damper at the very least on the market. It's definitely unwound the market in the short run. So as of right now, to kind of wrap up, I think I covered all the notes sufficiently. But sort of to wrap up, I would say you got to let's get this on your charts here. This is too busy. Forget that. Let's do this. Let's get, get your fib retracement grid on your chart so you're ready. And don't allow think or swim if you use it to switch over to percent out of nowhere like it does to me all the time. But yeah, you're going to want to have that on there and definitely going to want to have at least, your 20 and your 200 on there, probably the 52. I run all the way from the 10, even though they're not my big thing. I'm just not a big SMA guy, whatever. But I know a lot of people are. I'm not saying that they're not helpful. I just don't like relying on them in ways a lot of people do. But they're helpful in terms of like, that they're often respected as support and resistance. So keep them on there. But yeah, I mean, I think the big level becomes the 150, 200, 100 if we really do go into sell-off mode. And if they hold it, it'll be impressive to me, frankly, if they hold this thing above the 20 and it just doesn't crack. Now, if the news just stays kind of ugly and they hold it, I'll really be impressed. Now, if the news changes, right, then you understand, well, hey, there's this, we've reached a peace accord out of nowhere. Okay, well, I can understand why it held then. But if we don't get some kind of surprising news like that, I'd be surprised if it just held. If it did, I'd really be impressed because as I say, the last couple of weeks leading into this have really kind of given me that uneasy feeling. That's not the Spidey sense thing. It just I've been describing it as like an uneasy market. In the write-ups, I just don't like the way it's traded. In terms of when it had more opportunity and I think could have really started to squeeze even more. It didn't, and maybe that's because they knew this news was eventually going to probabilistically speaking, it was likely to rear its ugly head, which it has. So that could have been some of the reluctance. I can't say. It's just tough to say. The other thing could be that those air pockets we mentioned on the way up, they might matter now. But in terms of not breaking out, it might not be over yet. It's just that the they didn't do impressive things lately. It just some stocks have, but the market indexes have not been super impressive of late, right? I think it's the volume is dried up. It might be that whole FOMO essentially FOMO squeeze has they've gotten all the buyers in on that for now that are willing to buy. I don't know. Only time will tell. But negative divergence, right? Cracking support, your first form of support that's big, that support line I've got drawn, that's been cracked. You could say, well, that's no big deal, but as I noted, like look at what happened last time when we did crack that, right? So if you crack this, it could end up being a big deal. That's why, to me, like I would immediately go into hedge mode, right? Not if there was no real serious news out there, it's one thing. And if there hadn't been a long run with very few pullbacks, that would be one thing. But this has been super strong run, and you've got this geopolitical stuff, and they might be able to make some hay out of this, and it's a good news reason skirt type thing they can hide behind to justify selling. So if they want to mark this market down in front of Q2 EPS so they can then bottom it and then start running back up into Q2 EPS and then tack on big earnings beats as they often do. They probably want to cheapen this thing up first. So that's another way to look at it. So on that note, I think I'm going to wrap up because this kind of thinking can really go on and on and on and on, and we don't want that. So I'm going to wish everyone a great weekend if you get to watch the video early. As always, I hope that something I shared with you helps you out this upcoming week or some week in the future. And I hope that everyone has a nice, safe one and stays safe in these markets. And let's hope that things improve between these countries so that we can get people out of the way of missiles and bombs and things like that. On that note, have a great weekend. Thank you for tuning in.